Hi, and we are back. As usual, for the last 2 weeks, we've started this Q&A session on buying and selling properties. And this week, it's all about loan or mortgage for your house. With me today is James Ong. He is a director of Fortis FP Consultancy. Thank you again, James.
Thank you, Lita.
Okay, James, we are going to talk about mortgage or loan hunting for, property buying. Sure. So when we say about loan, how can one know how much they can afford in terms of house value, and also how much can they borrow?
Okay, a lot of people when they buy a house, they're actually thinking buying house is very straightforward. Yeah. Actually, it's not. If they know how to plan properly, it can be very stress-free. If not, they'll have a lot of happening, a headache a little bit. Before one can take a loan, you must see actually how much cash you have. Okay. A lot of people, they thought buying loan is very easy. Important is to see how much cash you have. And because buying houses also sometimes the government allow EPF for you to take the EPF and buy. So after you have known how much cash you have in EPF, then you decide how much you need to take from the bank. This is very important. So a lot of people, when they do not know how much they want to take, they just go in there. But it is important to make sure you can pay until you sign the S&P. Means you pay the deposit, everything. Let's say 10%, then you see how much the bank can give you a loan. That is how normally people goes about it.
Okay, James, when you say we have to prepare the money for the upfront, right? And then there are also the saying that you must have a little bit extra money for the upfront for miscellaneous fees and stuff like that. So how much exactly that extra upfront should we prepare?
Okay. Lina, you see, sometimes you buy from developer, you have a bit advantage. Okay. They always say you pay a small booking fee, so sometimes it's just a few $1,000s. But if you buy, let's say, from a secondary market, means you buy from a property that somebody has owned. So normally you have to pay a deposit, 2 to 3%. All right. So once you buy 2 to 3%, you pay. Basically, you book that property. After that 14 days, you have to just sign the S&P. So in other words, when you buy a property, let's say it's 500,000, you have to get ready 50,000 within a month in order to sign the S&P. After you sign S&P, you have to pay the lawyers. Of course, after you sign the 10%, then you have to see how you're going to get the 90%. The 90% will depend on how much money you can actually borrow from the bank. So the maximum could be 90%. If it's less, then you have to find money, top it up.
Okay, now we have that already. And what are among the fees that are associated when buying a house?
When you buy a property, let's say you decide to buy a property, let's say you get somebody to search for a house for you. There are people who wants to have a very specific need. So they hire somebody to search for a house. They pay a fee to search for the house. After that, let's say you have found a place and you decided to say, okay, I want to buy. You sign an S&P. When you go into a contract, you sign a sales and purchase agreement. Number one, you have to pay a lawyer fee. The lawyer fee to drop the whatever it is. Then at the same time, you may need to pay extra fees for valuation. This is the fee that you actually have to pay. And these fees are at the stage where you actually sign the S&P. But after you have got the purchase agreement done, you may need to get a financier. So the bank will say, okay, I'm going to give you a loan. I give you a loan, you sign here. Once you sign the loan agreement, you have to pay the lawyer's fee for the loan agreement. Then you have to pay the valuation fee again. So banks normally need to make sure the property you're buying is of the correct value before they give you the money. So these are the fees from the S&P up to the fees you sign. So you have to pay actually a lot of fees. And a lot of people, sometimes they're not aware. When they're not aware, they thought buying is paying 10%. No, it is not. So it's always good to go and ask around what are fees that you have to pay. So at least when you buy the house or buy the property you want, you feel very happy. You don't have to be stressed at least, oh, alamak, I got to make sure that I have to pay this extra, I don't know about this. These are the fees until the house is ready, then only you start the installment.
But I think that would be the most common mistakes that the people are doing right now. And then shopping for loan or mortgage can be a tricky business because there are so many types of loan and mortgage for your house right now. So how can one determine the right loan for their home or for themselves?
Loan to me is like clothes. Different people wear different clothes. Their body, like mine, only certain type of clothes. So loan is very individual. So it is important. I always ask people that if you want a loan, you have to tell yourself why you're taking the loan and is it for staying or for investment. how much money do you want to fork out the balance of the finance. I believe the most important rule is to get a few banks to give you the quotations.
Okay.
So let's say I want to take a loan, let's say 500,000. How much is the rate? Ask all the rates. Ask the bank to give you the proposal. Then you compare. Then from there you see how much can you afford it. Then after that you ask a lot of questions. Important is to ask as many questions as possible. So when you go into a loan, your eyes are fully open and you're aware what you're signing for. But some people they decided, okay, terlalu a lot of work. Why not I get somebody to help me out? So there are people now in this profession, what we call financial consultant, mortgage consultant. For small fees, what they do is they represent you and they go and find a loan for you.
Okay.
Then they see whether you have the ability to comfortably pay the installment. So it is important to go and shop for a few, to get the best deal for yourself.
What would you reckon the questions that one should ask themselves when faced with all sorts of loans?
Number one is how much can you afford to pay for the loan? A lot of people thinking that, okay, I pay 1,500 installment. Then I ask, is there any other thing? So owning a property is not easy. So we have to be comfortable. My rule of thumb is very simple. Banks give you a loan based on 1/3 of your income.
Okay.
Let's say you basically have $9,000. So bank will say, okay, I take 3,000. Provided after deduction you still have 3,000. 3,000 is for the bank. So 3,000 is the commitment. So you don't actually overcommit. When you overcommit, it's very hard for you to service the loan. So once you have decided that this is the amount you're willing to commit, then you don't have to worry. When the time comes, you just pay the installment. But of course, everything in life we expect better in the future. If we make 9,000 today, in 2 years' time when we take the house, I'm very sure most of us will make more than 9,000. This is the aspect we should look at. Okay,
thank you, James. It was very enlightening. Okay, now we know that buying a house can be a tricky business, especially choosing for a loan. And should you have more questions, you can always call Fortis FP Consultancy because James has got an excellent advice for you. So we are going to be with James again next week. So stay tuned on In Realty.